Mr. Gerhard Greyling. Gerhard started with Cargill in 2018 as an advisor in Moose Jaw. Gerhard came to the prairies from South Africa, where he earned a degree in agriculture management and spent 9 years as a grain trader. After moving to Canada with his family in 2016, Gerhard worked as a farm manager and pulse grain trader before joining Cargill team in 2018. And he's part of the Cargill's marketing analyst team, currently working with Cargill. Gerhard is going to talk about grain markets today and tomorrow. And can you guys give me a round of applause for him to begin his conversation with you guys? Thank you.
Thanks. Welcome, everybody. Thanks for braving the cold and spending the last hour with me. Welcome to Manitoba Ag Days, and I trust you will learn something here. Today we're going to focus on where are we today, heading tomorrow, and we'll take a quick look into the future regarding grain markets and some of the risk, and we'll bring it all together, and then we'll start looking at how do we set up a plan and come up with a risk management framework. So first off, let's start with who am I? I am Gerhard Greyling, Regional Market Analyst for Saskatchewan and Manitoba. I'm part of a team of 3 analysts nationally that works for the Cargill Market Sense brand. I started as an advisor 5 years ago, and I love to see clients succeed and the passion just for grain marketing and helping our clients. Prior to Cargill, I spent a year as a pulse trader dealing into the Middle East and to India. And prior to that, I was a grain marketing sales rep in South Africa dealing with maize and corn in South Africa. Today, we're going to take a look at 2024 and to help you look at how to make confident and informed marketing decisions. So we're going to dive into the agenda here a little bit just to see where we are today. We're going to do an overview on the year and oilseeds, biofuels, wheat, and then we'll get into the nitty-gritty of risk management framework and how we come up with a plan, and then how do we take control of our emotions, the markets, and then just deal through that. So where are we today? If it wants to go. So for those that you don't know, you are in FCC theater. If you found yourself in the wrong place, exits are top, so please find your exits there. But all jokes aside, the real question is why are we here today? And we're here to talk about markets. Markets are super volatile, and we have a lot of geopolitical issues, transport issues, weather issues, you name it, the markets are super volatile. So we'll start off with the king of the oilseeds, which is soybeans. And here we have a chart of March futures. This was pulled on Friday. And we'll just do a little bit of a history view, because in order for us to look or know what's going to happen in the future, we have to look in the past. And then we'll bring it all back together to kind of see how we can manage the future and go into the future. So first off, last year, December, Jan, we had the Argentina drought. The market ran up, tested at $14 quite consistently, and we had a bit of a weather rally in South America. After that, towards March, we had a bit of a financial crisis in the US, and if you remember correctly, it was the Silicon Bank Valley that started it, and it kind of pushed the market lower to that 250 levels around about May, going into June. Once we got to that, we saw harvest pressure from South America. So Brazil, not Argentina, had a record crop, and it pushed bean prices or bean futures all the way down to about $11.50 right at June. Once we got to that point, we had the US drought or the US weather that came into play. And speculators or the news at the moment was it was the worst drought in 100 years. And we saw this rally up way back up to like 1350. We saw a lot of volatility in the market, and we started seeing wide swings in a volatile market. to the effect of $1.50 to $1 a bushel range, to the top side and to the bottom side. Then as time moved forward and we got into October, November, we saw the US harvest come off. With it, there was a couple of issues on the weather as well. After the US harvest, like our focus shifted back to South American weather, so back to the start of the map. And as you can see, like we had the weather scales in South America. Oh, it's dry, it's not dry, it's wet. And then we started seeing the market sell off as the crop is getting closer to the pot filling and moving along. And then on Friday this week, last week, we saw the USDA numbers. They reduced the South American crop size, but in the bigger picture, Argentina is making up for some of that lack. And now we're kind of inching closer to the lower lows going forward. So that is soybeans and how we got here today in a nutshell. So a bit of the history, and we'll dive into canola now, because beans and canola, there's a close correlation between the two. If it wants to move, okay. So on canola, if we do the same exercise, we started off in December, Jan, with a high China demand. Like futures were holding at 800 values, and we were pretty excited because it was decent values. Would have loved to see the 2120 values of a 900 plus, but we saw a lot of demand from China, kept our prices stable at that 800 levels futures-wise. Then as we got into Feb, March, we saw the financial crisis or issues that we had in the US with the Silicon Bank. And then on top of that, we had South American harvest, the Brazil crop that came off, and it pushed canola futures to the lowest levels for this year, around about the end of May. That was the 31st of May, 2023. Right after that, the US finished their seeding on their beans. We saw US weather got back into the market, so a lot of volatility, dryness, the market got scared, and we ran up to a little bit of a consolidation. And then on top of that, when we hit into July, we got our own weather rally in market. So it was dry in Canada, it looked terrible, and we ran back up to higher levels. Once we got into July, which coincides with our seasonals, we normally see our July high there. The market kind of saw that the harvest was better than expected. A lot of growers saw bigger yields, and the drought wasn't as bad as we expected it was. And then the market kind of just started selling off. We sold off to the 700 levels, kind of hoped there to find some demand out of China or some of the other buyers, but we didn't really see any demand. And on top of that, we started seeing some farmers selling, and we just saw the market push lower. Currently, we're trading close to that 625 levels and still trying to find demand. So that is how the history of canola looks and how we got to this point. So now we're going to quickly kind of take a look at spring wheat, and then we're going to bring everything back together. So when we look at Minneapolis spring wheat, January, February last year, we had the anniversary of the Russia-Ukrainian war. That was the second anniversary. This year, we're coming up to our third anniversary, so we'll see if there's anything that's going to happen out of that anniversary. Once we get into March last year, we did see that Russia didn't do a new offensive push on Ukraine, and the market kind of sold off. So there was a lot of risk taken off on the market. And then we got into our winter wheat weather market. So we had Kansas weather market, and we saw a lot of knee-jerk reaction up and down. We got to a point where the US drought featured again. We ran a little bit higher. And the next one I just want to bring our attention to, this next rally that we did see there was around about June, and this is when Ukraine blew up the Crimea Bridge in Russia, which disrupted grain flows to some degree, and the market sold off because they got it figured out. And then the market just started running up to higher levels on the wheat, which was a combination of US weather, Black Sea issues, and then right at the end of July, we saw Russia pull out of the grain deal, and the market kind of went into a risk-adverse mode and started selling off. To add to that pressure, we saw Russia harvest coming off, EU harvest coming off, US harvest coming off, And then on top of that, we had the Ukrainian corridor figuring out how to circumnavigate along the coast, missing all the sea mines and finding an alternative to export some of the grain either via rail or road into Romania or along the coast through the Danube River, and they got it figured out. And then I just want to bring our attention to this big sell-off that we saw at the end of September here. If you remember correctly, we had a WASD USDA report that came out, and they increased Minneapolis stocks and the yield, and we saw about a 30-cent sell-off in the market back in September. Ever since then, we saw the market kind of just making newer lows and kind of pushing lower till we find demand. And if you look at the low here at the end of November, that's kind of when China started stepping in and buy. That's when we saw fresh demand. So once we see demand, prices start rallying up, futures kind of pushes higher till it gets too expensive, and then we kind of drop back again till we find fresh demand. This is how we looked at wheat. So to summarize, we saw a lot of volatility in the markets. We saw a lot of weather issues in the markets. We saw the effects of financials in the market, and we are seeing a lot of uncertainty in the markets as well. So now we're going to take on how did we get there? How did we manage all this uncertainty? How did we get to the point where we are today? How did we get to $7 wheat futures? How did we get to 620 March canola futures? Why is beans trading at the value that it's trading? So just bear with me here. We're going to go through a little bit of a road trip and then how did we got here. So last year in July, this is what we saw. This was the moisture condition, right? And this scared the bejeebus out of everybody. Like, this brings back all that anger, that fear, that emotions, because we remember 2021, and this came back to the market. So what happened with us as Canadian growers? We froze like a deer in the headlights, because we remember like this, and we were not going to get caught with our pants down again. So like, this is still in the back of our head. This is what the market saw. This is what we experienced, because it looked really bad. It didn't rain for a long time. So like, this was the qualifications of another drought. And this left huge emotional scars within the farmer community. Like, it was bad. So just to show you the effect that that had on the market, and we just did through this exercise, this was the effect. Once the market saw that picture, once the Canadian growers sold that picture to the market went, oh no, it's bad, it's as bad as 2021. We have to go back up. And the market did that. The market reacted. So that's what happened. So now, I just wanted to bring us to another point here. So imagine this, just to give you a different point of view. So we saw it's dry. So we gather all our buddies. We're getting into our wife's minivan. We're heading to a Winnipeg's game. We're getting on the number one. We're heading down there because we know where this market is going. Like, we've been through this again. So we pick up our buddies. We pick everybody up along the way. And then along the way, we find this one hitchhiker. He's dressed decently. He looks okay. He looks like an okay guy. He smells a little bit, but he's okay. So we pick him up as well. Everybody's on the minivan, and we're heading to Winnipeg. Then, all of a sudden, the moisture map is not as bad. And the market picks up on this. So we're driving to Winnipeg. We're dozing off. We're getting tired. And then we let the weird hitchhiker take the wheel. And then he's taking a different off-ramp. He's not going to Winnipeg. He's going somewhere else. We're too scared to say anything, so we kind of just sit there excited. And he's moving to a different rate. So like, now we're not going to Winnipeg, but we're going somewhere rural Saskatchewan. And this is what the market did. So to explain that reaction, so the market caught on, said like, it realized it was not as bad as 2021. The market pivoted away, didn't just completely drop, it gave us a chance. It's like, so it's not as bad, we'll kind of wait and we'll kind of see what happens. So the market pivoted away and gave us the warning shot that it's not as bad. So this is how it looks on a chart, but in order for us to bring all the puzzle pieces together, let's take a look at where canola has grown throughout Canada. So I want to draw our attention here to a rapeseed production chart. As you can see here, we produce about 28% in Alberta, 55% in Saskatchewan, and about 16% in Manitoba. And to overlay or to complete the puzzle, what I'm going to do now is I'm going to overlay a vegetation health index of 2023 and 2021 over this map just to kind of show you that, yes, there were drought areas, yes, there were concerns, but where were those concerns? So hopefully this works. Hopefully we can flip between the two. So if you look at this chart, you can see the two circles is where the drought was more concentrated at. So this was August 2023, and if you look at this is August 21. So I'll flip between the two so you can kind of see how it looks. So if we look at 2023, we can see the drought is more concentrated in some of the areas. And then keep an eye on the piece area there, the top right corner there, and here as well. And then if we look at 2021, you can see the drought was more widespread. So it was bad, but not as bad. And if we overlay those maps with the canola production, this is how it looks. So you can clearly see here, like, yes, there were some droughts, but it was more in pasture land or grazing land. So yes, they do grow some canola on the eastern side of Alberta and the western side of Saskatchewan, but it's not the main producing areas. It's not the same as 2021. And this is what the market picked up. And as soon as the market realized this, with a better than expected yield that came off, this is how the market reacted on the market. Oh, sorry. So that's what happened. So the market realized, like, it's not as bad. There's actually a big crop out there, a decent sized crop, and then we kind of pulled back aggressively. And that's the story on canola. That's what happened with canola, and when the hitchhiker or the market took over control. And now we're just along for the ride. And then throughout this presentation, we'll touch base on how do we manage those emotions, how do we manage that risk. So to summarize, we had a weather market rally. We had a correction. The market picked up on it and it corrected. It pivoted away. And then we had better than expected harvest. And the market's kind of showing us. The numbers is showing us that. So now that we've went through the canola and the back, let's start looking ahead. Where are we heading tomorrow? What's this market going to give to us to head into tomorrow? Like, what's the plan? Where are we heading tomorrow? What's the risks? In order to get that, we're going to do a brief overview on oil seeds, and we'll touch on beans, and we'll touch on canola. We'll dive a little bit into biofuels. I'm not a biofuel expert, so we have a bit of stuff in here, and then we'll dive into wheat. And then we'll bring all the pieces together, and then we'll start looking at how we can use the intel that we have into the market. So let's start with South America beans. South America has been in the market quite recently, quite a lot, because of weather, because of their bean production. So South America is the biggest bean production in the world. They are about twice as important as the US. So they produce twice as much as the US currently. If you look at this chart, green would be Brazil, yellow would be Argentina. If you look at last year, you can see Argentina produced roughly about, I think it's 23, 25 million metric tons. So they had a big drought. This year, the yellow is almost double that. So this year, Argentina is producing about 50 million metric tons. Friday, we saw the USDA reduce the Brazilian crop from a 161 to a 157 million metric tons, and they increased Argentina and Paraguay as well. So what this is telling us, like, even though we are seeing weather concerns in Brazil, they still has the potential to have a huge or record crop. And out of my experience, big crops always gets bigger. Okay. So they still have the potential to have a big crop. Even if we see the Mato Grosso region lose another 20%, Argentina is making up for the lack, and they'll probably be on par with last year, but at the moment, they're set up for another record crop. And the market is taking note. The market is paying attention. If we flip the script and we kind of look at acres, we can see here that South America increased their acres this year with 5.5 million acres. So that's a huge increase, and that is out of Argentina and Brazil. So we see this huge increase in acres. So what does that mean? So now we've got, all of a sudden we have this big increase. We've got this big crop. We have weather scares. Because we have weather scares, they've got more acres that they can put on risk to kind of absorb that weather scares that we have. So we saw the same thing in the US last year with US corn. Like, yields were well below average, but because they seeded this huge corn crop in the US, there were just more acres that they could spread it around. And then we ended up with a huge corn crop, as we saw Friday, with like higher corn yields, higher corn carryover, higher corn supply. So now we touched on the production numbers. Another piece would be the carry out. So this is important because a big carry into next year lays the foundation for where prices are going next year and in the future. So if we look here, South America has a big carry in. They're about like 54% of global market carry out. And that is if they have the decent crop that we are saying now. If they have a bigger crop, this increases, and this just makes the problem bigger further in the year. China is in the all others area, and then we've got the US there and 7% as well. So globally, what happens in South America matters to the world, matters to the beans. So just want to think on this puzzle piece. Like, if we do see this big carry out on here, what risk do you think that holds for your farm? What is the risk on your farm if this plays out for the next year or 2 years? Where do you think prices would go? So now we've looked at supply. Let's look at use. So this is a bit of a good news story. So like we just talked about all this production, like record crop. We don't know what we can do with it. Like, I mean, South America is another big crop. We'll probably see an increase in acres in in the US as well. The good news is, or the bright spot is, like, even though we have this record crop, we still have a use for it. Like, we're still using everything up with this record crop. So as soon as we see usage drop, that becomes more concerning, because then we have too much. But currently, our intel suggests like we are still using it up. So it's either in biofuels or in the feed market. We are finding a way to get rid of the big bean production that we have in the world. And this is probably why soybean prices locally here in Manitoba is holding its value. It's not really being affected with what's happening in the South American weather, because we had a lot to ship out this year to different markets as well. And this is why we are seeing decent prices, or they're still holding their values here locally. So in summary, we see this big South American crop, or the potential for another big crop. We're seeing a large carry in, but we are still seeing strong demand as well. So now that we've touched on beans, there's a close correlation between soybeans and canola. So let's take it back, and now let's look what's happening in canola and the view forward. On canola, so as you can see here, maybe I'll ask this question by a show of hands. Who here is planning on growing canola this year? Okay, so most of the room. Sticking to rotation, I presume, or assume. So if we look at this and we do the math, this year's crop came in at 19.6 million metric tons. And it's probably the fourth or the fifth largest canola crop that we've produced. The bright spot about producing such a big crop is exports and crush. So crush, which is in the green, and we have exports on the red. So let's focus on crush first here. Crush is currently running at a 10 to 10.5 million metric tons per year. And that includes all the recent expansions that we saw happening in the last 6 months to a year. And on that tone, the Cargill crush plant in Regina is said to be taking product summer of 2025. That will add another 1 million tons to the green bars here. But if you look at this, like that's not the problem. Like exports are lagging. That's where the problem is. Because if you look at 19 or 2021, we saw these huge exports. This year compared to last year, we're already lagging on our exports. So exports are not doing their part. Crush is doing their part. If we put everything together, exports are forecasted this year to come in at 7.2 million metric tons. Well below last year's pace, well below the 5-year average, substantially below the 5-year average. And we'll dive into that here in a bit. So where have we been exporting to? So we have been exporting, but where to? So we export to China, which is our single biggest buyer, and a lot of our attention isn't at China, because they are our biggest buyer, but at Japan and Mexico, a UAE, and the US is our other biggest buyers, and those combined take more than China. So now what's happening is we've kind of taken those for granted. We need a Mexico, we need a Japan, we need a UAE to step up and meet our needs. Because China's been doing their part, but these others are not. So what's basically happening is, it's like when you take your wife or your girlfriend for granted. Eventually, she's going to figure out that you're taking for granted, and you're going to pay for it. Hopefully, she doesn't replace you. But because what's happening here is they're replacing us. Like Canadian canola is losing market share. The market is showing us that we are replaceable. That's what's happening. So talking about canola and how we export it, let's look at how it compares globally. So this is a bit of a busy chart, just bear with me here. So we've got canola export values in US dollars per metric ton. The black line will be West Vancouver. We've got France in the purple. We've got Australia, East Coast on the green, and then we've got Ukraine. So as you can see here, currently Canadian canola in US dollars a ton is running about $45 higher than our closest competitor. So we are the high-priced island at the moment. And then on top of that, you've got Australia increasing acres, you've got EU increasing acres, you've got Ukraine increasing acres as well. So at the moment, we are out of price, and this is why we're losing market share. Because Australia is a lot closer to China and Japan than we are. We talk about all the ocean freight and all the geopolitical stuff that's there. We'll dive into that as well. But like, this is why we are losing market share. And a fun fact as well is like, we've been actually importing canola from Europe. Not a lot, but we have been importing, which is kind of shocking because we're not supposed to import. So if we're importing, somebody's making money, and that just tells us like it's a lot cheaper to import canola than to export it. So just keep that in the back of your mind as well. So if we look at, so we talked about supply, we talked about crush, and we talked about like how the yields were kind of a little bit better than expected, but crush is not really there, and exports is less than expected. So here's a way to look at it. We're well below last year's line, which is the green line. We're well below the 5-year average, which is the black line. So as of today, everything together will come out at 7.2. Last year, we're lagging last year's export by 700,000 metric tons. The 5-year average, which is more than norm, is 8.6, and we're lagging that by 1.4 million metric tons. The more we move on to time-wise, the bigger that gap is, and the hole gets bigger and bigger for us to get out of it. And it might not be an immediate problem, but we might see the problem further down the road. So is it a 6-month problem, an 18-month problem, or a 2-year problem? That's kind of why we're moving into canola. So to summarize, we saw decent yields, in some cases better than expected. We saw strong crush, which is good. We saw the capacity that we're going to increase as well. And we are seeing weak exports. So that's the missing piece. We need exports to pick it up. Oh, so that's the next one. So now we're going to touch a little bit on biofuels. So we've looked at soybeans, we looked at canola. Let's take a look at the grand scheme of things here, and we'll touch a little bit on biofuels. Get it figured out. So to understand biofuels, or the basic concept thereof, like we need to look at soybean oil and crude oil to measure it up. That should be that one. No, the other one. It's the other one. Yeah. That's it. Okay, sorry about that. We're having one or two technical issues here. So biofuels. In order to talk about biofuels, we have to look at bean oil and crude oil, and we look at the spread. So if we look here, we can see that to produce renewable fuel, it's more cost effective to use crude oil than bean oil. So bean oil is about twice as expensive as crude. Now you might ask, well, how's that even profitable? Like, that doesn't make any sense. Well, this is where government comes in, government mandates and government subsidies. And this is why it makes sense. Government mandates is currently capped at or the US government mandate is currently capped at 3 billion gallons till 2025. But before we dive deeper into diesel production, there's the red line, that's where mandates are. The red bars is what we are producing. So we are already producing over mandates. So the market's kind of ahead of it itself. But we'll dive into that now. So first I want to draw our attention here to a map here to kind of show you these are all the new refineries that are coming up and running in the US and Canada. If you look at the circles that are colored in, those are the ones that are currently producing and overproducing above the mandates. The circles that are not colored in are planned, and we don't know when they will be up and running. And the dotted circles are planned expansions. So there's a lot of potential here. And the market is really putting its money behind this incentive. However, the problem that we are facing is US mandates is set at 3 billion gallons. And that's the line, that thick red line that we have there. And we're currently overproducing at that moment. So in order for us to absorb this additional production above this red line, we need mandates to increase. We need somebody to resolve this. So we need the Canadian Clean Fuel Regulation to help us to get to the finish line. We need a California, we need a Oregon, we need a Washington, and probably a few more that we don't even know about, to either increase the mandates or resolve this for us quickly. So to summarize, federal mandates are set till 2025. Then they'll reevaluate them and they'll probably increase them, but we're already overproducing. So in short, we need government to up it here, but just remember who we're trusting here and whose timing we're trusting here. Who are we trusting with our livelihood here if we put all our hope in this? So I know this presentation was heavily focused on oilseeds and biofuels and canola. We'll go to a little bit lighter side. We'll start looking at wheat and how that plays in, and then we'll get into the shortcut and how to manage the risk and how to be successful. So on the wheat, if we look at the wheat, we can kind of see here the breakdown of global wheat exporters. We've got Russia at 24%, we've got the EU at 18%, and then we've got Canada at 11%. So fun fact about Canada is even though we have 11% of global exports, we only produce about 4 to 5% of global production. So how does Canada fit into the global picture from a pricing point of view? And this is a busy chart again, so I'll just go through some of the colors so it's more clear to see. So Canada is the top there, it's the purple. They've got Australia in the teal. Then we've got US hard spring wheat. And then we've got US soft winter wheat, which is in the black. We've got Argentina, and then France, and then Russia. If you look at the dark green one, which is Argentina, round about last year, October, they were on par with Canada, and then they kind of pulled back because they had a drought, and then it pulled back to be on par with France and Russia. Canada is the high-priced island on wheat, but we can because we've got good quality. Like, our product is worth a premium. Like, the protein that we deliver, the world wants. Russia, France is the Walmart of wheat. That's the benchmark. So they're trying to face or trying to get to the bottom, like who can sell it the cheapest. What we saw this year is normally we see a huge demand for Canadian wheat, and we have been. Like, we are seeing record exports from Canada into the world on our wheat, because like we've got the best product out there. Like, people want our protein. The wheat story is going to be on repeat for the next couple of weeks. What's going to happen is Black Sea and EU wheat is the cheapest, and that's what buyers are focusing on. That's the benchmark. So if anybody else is on par or it's competitive with them, we'll see them buy. So US wheat finds buyers when it's competitive with the Black Sea. Once it finds its buyers, futures run up, becomes uncompetitive, and demand disappears, and we pull back. And then prices fall back down until demand resurfaces. And that's going to be rinse and repeat, till we find a new story. So either something's going to happen in the Black Sea or wherever, so we need a new catalyst to move the market out of this band that we are trading in. So now we're going to take a little bit of a look at grain flow and choke points and kind of just talk a little bit about geopolitics and how that affects the market. And then we're going to bring all the pieces together and we'll get up to the plan and the shortcut. So grain flow, just to bring it to our attention, like this is a map of how or where all the choke points are in the world. And it's mostly focused on maize and wheat and beans. So we have the Panama Canal. Currently there's a bit of drought in the Panama Canal. So they can allow 40 ships through on average through the Panama Canal per day. Currently they're only doing 22. I think it's 6 Neo-Panamaxes and then 12 Panamaxes. So under capacity. Then we have the Turkish Straits, which is the Black Sea region, and we all know what's happening in the Black Sea region. Then we have the Suez Canal and the Strait of Bab al-Mandab, where we are seeing all these terrorist attacks or the Yemen-backed associated with Hamas. That's where all the choke points is. The other one that's concerning, and this might be far in the future, if you look at the Strait of Malacca, we're already seeing tensions between Taiwan and China. Not saying that's going to happen anytime soon, but there's a lot of choke points, a lot of bottlenecks in the world potentially that could have an effect on prices. It's different this year compared to 20 and 2021 because there's not a food security and everybody's not running around to grab some food. So the world, I think, is in a more comfortable position, but there's still a lot of risk out there. So I just want to draw attention to this, and this is container freight. So this is how container freight is moving around the world, and you're going to see like it's not really affected by the Panama Canal, it's not really affected by the others, and everything is still going into China. So if we look at container freight, and now we look at bulk agricultural freight, different story. Now we can kind of see that they're not moving through the Panama Canal, it's probably too heavy. Everybody's going around the Cape of Good Hope. And then you might ask, well, why aren't they going this way around? It's because the earth is flat, that's why. Okay, that's a joke. So, so how do we take control? So we've looked at the lot of moving parts, all the puzzle pieces. Like, how do we take control of this? We've just shown you how volatile a market can be. All the markets are generally in a downtrend. So how do we take control of it? I'm going to take us now through a decision-making framework that our advisory team use with our market sense clients. And then this is how we manage risk. So we just went through, and I'll focus just on canola here just to make my point. This is what we saw in the market. This is how volatile the market was. There was a lot of emotions in this market, a lot of anger. Is anybody here feeling anxious, regret seeing this? Seeing a lot of missed opportunities? What if I tell you, like, I'll be willing, good money, $20 here, that our program outpaced the market with our decision-making process? And I'm not a betting man, so I'm pretty confident. So come after the show, we'll be in the Pioneer Lounge. You can come take my money. This is how we fared with our recommendations. So here's the proof. And it's easy to say, well, hindsight, this is how we did. Currently trading about $3 above the market. My dad used to have a saying that say, BS walks, money buys the whiskey. Here's the whiskey. Okay? So now that you've seen the proof, so let's dive into how do we get to that point? What is the nitty-gritty? Like, what do I need to know? Like, why are you sitting here? So like, here's the shortcut. So forget about all that market stuff because that's going to change tomorrow. This is what we need to pay attention to. But in order for us to do that, we first need to define what is our risk appetite, what is our risk capacity, and what's our risk tolerance. So you might have a big appetite for risk and willing to risk all the grain all the time. You might like gambling, like let's just risk it all every time. And that's okay, like we just need to know. But we have to discuss what our capacity is. Like, can we afford to risk all the grain all the time? Like, do I have bills to pay? Like, what financial obligations do I have? Do I have the risk capacity? And then we need to define what's our risk tolerance. Because some people like to put it all in black, some people don't. What is your risk tolerance? So we need to define these three things. So a different way to look at it, and I'll make it more personal, is cheesecake. I love cheesecake. Like, I really, really like cheesecake. I can eat 8 cheesecakes. Easy. But I'm a skinny guy. My stomach can probably only hold 4 cheesecakes. So that's my risk capacity. What is my risk tolerance? Well, had a good steak dinner last night, maybe I can only eat 2 cheesecakes. Maybe I'm lactose intolerant and I can't eat any cheesecakes. That'll be a fun exercise. So we have to know what your risk tolerance is. So now that we have the framework for risk, let's dive into how to manage that risk in a volatile market by using the risk framework, as we're going to discuss now. So it's 5 points here. This is what we do at Market Sense. This is the kryptonite. This is something that you need to take home. So let's start by setting a goal. What is your goal? How do you define a goal? Is your goal to have a succession plan for the next generation? Is it to increase the farm size? Maybe it's just having fun. What is your goal? What do you need to get out of the market to have the life that you really want and leave for the next generation? That is the first question. What is the goal? Once we've defined the goal, now we move into step 2. What does success look like? Because you have to remember here, if you are planning to start farming at 20 years old, planning to retire at 70, that's 50 growing seasons, 50. How do I measure success in those 50 growing seasons? Is it consistent marketing? Is it managing my risk? Or is it sleeping sound at night, not having any anxiety or regret, knowing that I have a plan, knowing that I've got a success? So once we define success, now we need to look at the opposite, the other side of the coin. What is failure? How does failure look like? Is failure one drought in the 50 growing seasons? Is it $10 canola? Is it anxiety? What is failure? And it might look different for everybody, right? So now that we have goals, success, and failures, we have to look at what's our risk tolerance. And we'll bring it back to the cheesecake, because I love cheesecake. Is it still eight cheesecakes? What's your risk tolerance? 2 cheesecakes? Or like no risk? You don't like any risk, you risk at this. Remember that cheesecake looks different for everybody. This solution and answers in this character is not a one-size-fits-all. And this is what the program is so great about, because like it's custom-made. So once we have the framework, we need a backup plan. And that's a great thing about pharma, because we always have a plan A, B, C, extended. So what is plan B? What if we are wrong? If the plan changes or we get to this point and there's a backup plan is where we need to restart the whole process again. And then we get back into that rinse and repeat. And then we start back at the beginning and do the same process all over again. And that's the quick summary of like the risk management framework. So to summarize, here is it again combined. What is my goal? How do I measure success? What is failure? What is my risk? What is plan B? If there's anything that you need to take out of this presentation, this is it. So get out your pen and paper, write it down, get your phone, take a picture. This is really important. This is like super, super important. So in the closing, like I would challenge you, like try and use this for your business. You'll be surprised. And I'll put money on it. So, in market sense isn't just a fancy name. Market sense is making sense of the chaos in the market, in a volatile market. Market sense is the quiet voice in the storm. Risk management that we just talked about is hard to execute. This plan is a disciplined approach to managing your business, which could be in a volatile market. Because we are deeply invested in the advancement of your farm business, we are able to bring your goals to life and manage risk along the way. And like I said, this tool we use, manage risk, and all revolve around this structure, and it looks different for everybody. So giving you the perspective on the markets and to enable you to be informed and confident in your marketing decisions is what we do at Market Sense. If you want to talk to us more, I'll leave some contacts on here as well. We will be in the Pioneer Lounge after this as well. But before I leave and open up to questions, this is one of my favorite quotes, and what's something that we need to realize. Like, if we must play a game, we need to decide on 3 things: the rules of the game, the stakes, and the moment to quit. Here's some of the people that you can contact, so please take a picture of these as well. I thank you for your time and hope everybody travels safe and have a blessed day. Thank you for entertaining me and just being with me. I'll take some questions. There's like some questions. Can I take some questions?
Thank you, Gerhard, for thought-provoking information on marketing and trends, especially on major crops. I really enjoyed the presentation.
Thanks.
We have time for maybe a couple of questions if anybody has in the audience one. I can take the mic to him.
Okay, thanks.
What happens if Trump becomes the next president? What would you tell us if you were sure of that?
So the question is, what happens if Trump becomes the next president? I'm not a geopolitical analyst. I've got my own opinions. There's a lot of ways it can go. We've seen in the past how he handles free market trade, so it can be good or bad. So I'm not an expert, so I wouldn't do justice to answer your question. But like, if you want, we can take it offline. I can give you my conspiracy theory on it.
All right, I think we have one more question if anybody is willing to ask. There you go.
Do you have any insight into the oat market?
Just to repeat that, sorry.
Do you have any insight in what the oat market will do?
On oat crop? Oh, oat. So we're currently eating through a abundant supply of oats because the last years we're big stockpiling mode. It kind of depends on what's going to happen with seeding intentions going into 2024. Currently, we are eating through the oat market supply. It looks stable at the moment, and it's supported by the wheat prices as well. So it's taking its guidance for now from wheat. So whatever's happening in wheat is probably going to push prices on oat to some degree till they divert. But that might happen tomorrow. That might happen 3 months down the line. So, but as of today, to answer your question, they are supportive, but I think upside is getting limited as well because new crop is getting closer, right? Does that answer your question? Okay, thanks for your question.
All right, this concludes the session. Thank you, Gerhard, for being a part of the Egg Days. Really appreciate your knowledge and coming over to Brandon and delivering this talk. Really appreciate it. If you guys can give me a round of applause for Gerhard, thank you.
Thanks, guys.